The program for this evening goes like this. Minister will be delivering his lecture on the topic, The News Story of Indonesia, and this will be followed by a question and answer session chaired by SMU President Professor Arnold Di Meyer. I would now like to invite Professor Arnold Di Meyer to introduce our distinguished speaker for this evening. Professor Di Meyer, please.
Your Excellency, Gita Wirjawan, Minister of Trade of the Republic of Indonesia, distinguished guests, students, colleagues and members of the SMU community, good afternoon and welcome to this Presidential Distinguished Lecture Series. Last year at the previous SMU Presidential Distinguished Lecture Series, Associate Professor Dan Bresnis from the Georgia Institute of Technology in the USA spoke about government, innovation, globalization and economic growth in China. It therefore seems appropriate that today we will learn more about another powerful and rapidly growing economy, but one that is sometimes a little bit overlooked, the Republic of Indonesia. And it is against this backdrop that I'm delighted that we have invited here today a man that is charged with powering a thriving Indonesia ahead in the foreseeable future, and that we have been able to convince him to share with us his insights and wisdom with everyone here seated in this auditorium and actually in the overflow rooms. Ladies and gentlemen, therefore, can I ask you to join me in showing your appreciation to His Excellency Gita Wirjawan, Minister of Trade, the Republic of Indonesia, for having accepted this invitation. This Presidential Distinguished Lecture Series is an occasion for me as President of this university to invite international eminent and outstanding academics, scholars, or business or government leaders who have achieved its distinction in their respective fields to share with us some of their insights. My purpose is to stimulate intellectual discourse here among our SMU students, and I'm very happy to see quite a few of them here, our faculty and our staff and our friends of SMU, to have that intellectual discourse about matters of interest and issues of significance. I'm actually very pleased to share that with Minister Wirjawan has given this well-received series a perfect 10 today, because this is the 10th speaker, or he's the 10th speaker to grace the Presidential Lecture Series since its inception in 2005. Now, I'm very happy that we, as I said, that after having spoken about China, that this time we talk about Indonesia, because Indonesia is a country that hosts incredible biological, ethnic and economic diversity. It is now the world's third most populous democracy with a population of nearly 240 million. It's the world's largest archipelago state with many thousands of islands. I always see different numbers, so I hesitate to say which number it actually is, but it's above 10,000, above 13,000. And it's home to the world's largest Muslim population. With a GDP of over $500 billion in 2009, Indonesia was the third fastest growing economy in Asia and also Asia's largest economy, Southeast Asia's largest economy. As one of the few emerging markets to boast vast natural resources and a consumer-driven economy, with this domestic consumption contributing to more than 60% of its GDP, Indonesia has remained relatively unaffected by the global financial crisis in late 2008. And has maintained an impressive 6.5% growth in 2011. Its economy continued to fare well last year and had posted a robust growth of nearly 6.3% despite the global economic turbulence. Over the last years, we have talked a lot about BRIC countries, Brazil, Russia, India, and China. And these countries have fired the imaginations of investors over the world for more than a decade. But the latest acronym that is catching attention now is MIST, which stands for Mexico, Indonesia, South Korea, and Turkey. Investment bank Goldman Sachs has assessed these four countries to have the greatest economic potential this century. Apart from South Korea, 3 of these 4 MIST countries, Indonesia included, share the key features of having large, young populations with fast rising incomes. We here at Singapore can't compare to Indonesia. We're a small country right on Indonesia's doorstep. I am convinced that as a university, but also Singapore as a whole, we definitely have to pay greater interest to our big neighbor. Indeed, many questions arise in our minds here in Singapore. How can Singapore businesses venture into this market of tremendous potential? After all, Singapore is able to offer many technical know-how services and expertise that Indonesia needs. What are Indonesia's strategies for sustaining growth and for trade development? What are some of the new measures that it plans to introduce to reduce regulation uncertainty for foreign investors? Also, as Indonesia approaches the 2014 elections, will policymakers, as they sometimes do in other countries, lose focus? Will the government have the resolve to make economic decisions that might be unpopular but necessary should the global business climate worsen? There's probably no one better placed or qualified to address these concerns than our distinguished speaker here today. Pak Gita Wirjawan has been the Indonesian Minister of Trade of the Republic of Indonesia since October 2011. Prior to this appointment, he was the chairman of Indonesia Investment Coordinating Board, the major interface between the Indonesian government and the nation's business sector. Before that, as an investment banker, he worked for JP Morgan and Goldman Sachs in Southeast Asia and founded as well as served as the chairman of Ancora Capital, a Jakarta-based private equity fund. And he just told us before we came in that he started as an accountant, which for our students here in this room, or some of our students in this room, means there is a future for you. Mr. Wirjawan's success was built upon the firm foundations of an excellent education at the University of Texas as well as Baylor University in Texas, leading to a Master in Public Administration degree from Harvard's Kennedy School of Government. Ladies and gentlemen, would you please put your hands together to warmly welcome Minister Gita Wirjawan. Thank you.
Ladies and gentlemen, first of all, I want to thank SMU and especially the president, Professor Arnold, the mayor, and all the faculty members and senior members of the board of SMU who have made this possible. And I want to thank the students, teachers, and all the stakeholders to SMU in making this a success. Before I start my remarks, I want to just make a slight correction. Indonesia actually has 17,000 islands, not 13,000. But it also depends on whether or not it's low tide. So if it's low tide, it's probably 17,000. If it's high tide, it could be 13,000. You know, the famous Jimi Hendrix, the freak out guitar player, said one time, long time ago, that he would rather play in front of 10 people or 10,000 people as opposed to playing in front of nobody. And he wouldn't even mind if all of them would boo, as long as he doesn't play out of key. I hope I'm not going to play out of key today. I want to talk to you guys about two things, essentially. The first is basically the global economic situation and outlook. And the second is about Indonesia, quite obviously. If we take a look at the world today, I think it's pretty clear that the freshwater economists, predominantly based in Chicago, have been very influential in shaping the economies around the world, particularly those in the US, in Europe, and also in Japan, where the paradigm of infusing liquidity into the system is the way out of difficulties This is in contrast to the saltwater economist on the shores of the US, who would rather a more Keynesian approach of a more proactive government role in getting ways out of any difficult situation. The US, or the US economy, has gone through a bit of a slowdown and been able to muddle through with 1.5%, 2% growth rate. And it is viewed that it is probably growing at about 6 to 7% lower than what it should be. What it means is it's been growing at about $1 trillion less than what it should have in production on an annual basis. And $1 trillion means a lot to many of us in Asia. Whereas in Europe, we're seeing the trends of kicking the can down the road for the last few years, and it seems that it's likely to continue for another year or two. And the headwind of increasingly difficult fiscal postures by way of the high debt to GDP ratios and the seeming inability to create more fiscal space that would mean good for the millions of people, not only in Europe, but also around the world. China has felt it. They've been able to create so much capacity in view of the growing demand that would come from the developed economies in Europe and the US and also in Asia Pacific, increasingly in Africa and Latin America. But by way of the slowdown in the US and Europe, the capacity that was created runs at a lower utilization rate. As a result of which, they needed to reconfigure the economic structure to try to domesticate it a little bit more, a la Indonesia style. This seems to be working, but I think one must ask the question as to whether or not the demographics are going to be in support of that thinking. Because if you want to be more consumptive, you need to make sure that there is youth, that there is reproduction. Sort of what we've gone through in Indonesia the last few years. Demographically, Indonesia has been blessed, but demographically, Indonesia could be cursed too if we don't do anything good to the young people that enter the world. The BRICS, as you know, have been slowing down, with the exception of China coming down to 7.5%. Relative to the others, it's doing fantastically. And the BRIC countries, or the BRICS countries, have been over-relying on demands coming from Europe and the US, and some of them have been over-relying on commodities. Brazil, as a result, grew at less than 1% last year and is trying to figure out a way. The world seems to lack and be in need of a new source of oracular economic wisdom. That is something what everybody's searching, whether it's in Indonesia, Singapore, ASEAN, Asia Pacific, and the greater world. I had the opportunity and honor to meet up with my counterpart earlier today, the Minister of Trade and Industry, and also Minister of Finance, to talk about how ASEAN could be more resilient in the face of all these. I can speak from a trade standpoint. There have been challenges. And we start out with the metaphor or analogy of these 159 countries that are trying to figure out a way to get from one place to another. They want to go from one place to another. Some have GPS capabilities, some don't. Some have a better transport system than others. And the guys that have a better transport system are waiting for the weather to clear out. And as they're waiting, the other guys who don't have GPS capabilities start moving. And they get lost, and they accidentally or coincidentally meet up in some cafe, in some rest area, and try to hook up and cut a deal. When they're cutting this deal, this is the spirit of bilateralism that we're seeing in many parts of the world, whether it's in Asia, in Africa, in Latin America, or even in Europe. Some even go to the extent of a plurilateral understanding or undertaking. Some would take the regional approach in hopes that those things, whether it's bilateral, plurilateral, or regional, would be in complementarity and supportive of the spirit of multilateralism that would have been spearheaded at Doha. And that was 11 years ago, ladies and gentlemen. It's been very difficult to advance the agenda and spirit that would basically bridge the interest of the poor and those of the developing and those of the developed. It's a challenging time. Another example would be the initiative of some of the developed economies to go ahead with a Trans-Pacific Partnership Initiative. At the same time, when Asian economies are trying to move ahead with the Regional Comprehensive Economic Partnerships, or RCEP, as we more popularly call it. RCEP is basically a culmination of a group of Asian countries made up of Japan, China, Korea, India, Australia, and New Zealand, trying to deepen and broaden the already signed free trade agreements with ASEAN so that there is a thesis of investment, there is a thesis of capacity building. But unfortunately or fortunately, this sits on the back of a developing geopolitical situation, whether it relates to what's happening up north between Japan and China and Korea, and what's happening in the South China Sea, as we're seeing the US trying to better re-engage the ASEAN population, the ASEAN countries and economies. I think we will find it very interesting in the next year, 2 or 3, as the RCEP and TPP go hand in hand. Singapore is participatory to both of these. Indonesia has taken a view that we're not ready to participate on TPP because we're just not yet ready to be able to quantify and ascertain as to whether or not this would be net beneficial to Indonesia. And to be quite candid with you, we just don't have the bandwidth, because we've got to get the bilaterals done with a few countries that we've started discussions and negotiations with, and we've got to focus our bandwidth on RCEP, which hopefully will go hand in hand with the culmination and realization of the ASEAN Economic Community by the end of 2015. The ASEAN Free Trade Agreement is a beautiful, beautiful framework. This has promoted economic activities in all countries involved. Yes, there has been some issue in Indonesia with regards to the ASEAN-China free trade, but we've been able to manage, massage, and iron out the wrinkles. The politics got a little bit difficult because we were just sending coal and palm oil and getting handphones and laptops. We have to make sure that the domestic politics is manageable so that it becomes a sustainable thing between China and Indonesia through ASEAN. That, I think, has been able to be managed a lot better in the last couple of years. And we're hopeful that by infusing the investment thesis and increasing capacity in Indonesia through technological transfer and financial capital transfer, we'd be able to sustain it. And I do believe we will. Now, the trends of bilateralism, regionalism, plurilateralism are going to have to be in complementarity and supportive of the multilateralism. And it's key, because when we meet up in Bali later this year at APEC in October, and also the next ministerial conference for WTO in December, we've got to make sure that we're moving in the right direction. Policies that have been designed by countries to spur growth, to better the foundation for economic development, sometimes tend to get lost in translation. Because beliefs and policies are malleable. Malleable to the extent that the stronger do have the propensity to affect how things get perceived. That's the reality we got to live with. But I think if we stay steadfast with respect to the thesis, the narrative that we have agreed 11 years ago, I think we've got a chance. And that, I think, was reflected in the bit of a success that we got in Vladivostok some months ago when we met up at the last APEC meeting. And in recent months, we've been able to progress the conversation on topics such as the LDC package, or the Least Developed Countries package, and the Trade Facilitations package for the WTO. That's the global stuff. The second is on Indonesia. At the end of Sukarno, or his regime, the GDP per capita of Indonesia was at a mere $400. And Suharto took over. At the end of his term, the GDP per capita of Indonesia was $600. To be fair, Suharto actually brought it up to $1,200. But by way of the great financial crisis in Asia in 1998, things just got diluted. And it came down to $600. And the transition government of Habibie, Megawati, Gus Dur brought the GDP per capita from $600 to about $1,100. Until 2004, when SBY, or Susilo Bambang Yudhoyono, took over and started and continued the reform agenda that was started earlier. By the end of last year, Indonesia's GDP per capita was about $4,000. So SBY was able to quadruple the GDP per capita from the time he took over from Megawati. And if we were to extrapolate the economy until the end of his term in October 22nd next year, there's a good chance the GDP per capita of Indonesia would be about $5,000. So that would mean the quintupling of the GDP per capita of Indonesia within a 10-year period, ever since SBY took over from Megawati. We take a look at the fiscal posture. Indonesia may have some bragging rights. We run on a debt to GDP ratio of about 23%. And we've been running a budget deficit of about 1.5% each of the last few years. Pretty good, because I remember when I was a banker, when I used to make more money than I am now. Debt to GDP ratio was at about 90%. Budget deficit was double digit. Inflation was about 70%. Last year's inflation was a little under 4%. In 2011, it was 3.5%. we've been able to manage inflation quite effectively and efficiently. It's funny when I tell people the only thing that worries me about inflation is the price of chili. The price of chili makes up a good chunk of the index for inflation. Tells you how much spicy food we eat. So if we were to want to manage inflation, we just have to eat less spicy food. The other stuff is rice, which has been stable. The other stuff is fuel, which has been an issue for the last few months. I think from a monetary and fiscal standpoint, Indonesia stands pretty ready. And by the way, only 10 million people pay taxes in Indonesia. And we have a few more than 10 million people in our population. With only 10 million people and companies paying taxes, we've been able to reduce our debt to GDP ratio to 23%. We've been able to manage budget deficit at about 1.5%. We've been able to offer companies that have gone public to pay tax at a 20% tax rate. And our tax ratio has gone up to about 15.5% using the OECD methodology. Imagine if we were to be able to collect taxes from 25 million people, not 200 million people, not 250 million people, just 25 million people. I think we'd be able to offer tax holidays to everybody in this room who wants to move to Indonesia. I'm just kidding. That's the kind of hypothetical scenario that we're facing. And the good thing about Indonesia is it's full of Justin Biebers and Selena Gomez's. Very youthful. Somebody was asking me about the politics. By the way, I'll get back to the politics later, but somebody was asking me about the politics earlier. It's quite simple. By next year, there's going to be about 170 million Indonesians who will be female and youthful, who will be eligible to vote. Think about that. They will shape not just the political process, but they will shape the economic process and the social process, the cultural process of Indonesia. There are many challenges for Indonesia. The Gini ratio has ticked up a bit to about 0.4. Still below that of the US, proudly so, but still well above Singapore's, Sweden's, Germany, and many other prosperous countries who've been able to redistribute wealth with equity. And that's, I think, the challenge, midterm and long-term for Indonesia. How the hell do we use this fiscal space so that everybody gets to enjoy the cake? The MDGs, I think, are likely to be fulfilled by 2015. We'll probably be able to achieve an unemployment rate of 4 to 5% by next year. Poverty rate of about 6 to 7% by next year. Well below whatever rates we used to have 2, 3, 4, 5, 6, 7 years ago. I think the next challenge is how to make Indonesia more competitive. More competitive by replacing and embellishing the hopelessly antiquated infrastructure that you might have seen. Anytime anybody wants to see a traffic jam, just come to Jakarta. I guarantee you there will be a traffic jam most hours of the day. But that's a good problem. Traffic jams are emblematic of economic growth. But the question is anybody thinking about fixing it soon? That's what we've got to figure out. Soon. And as we have fiscally decentralized to the 33 provinces and 497 kabupatens or regencies and municipalities, I think we're on the right track. But the question has always been and will be for a bit with respect to the quality of spending. quality of spending is off questions there. We're allocating close to 50% of the budget into the regions, but if we did a pulse check yesterday, many of the provincial leaderships, kabupaten leaderships, are still using their budget to buy clothes, to build houses, and to buy cars instead of building roads and power plants and things that would actually help the future of the provincial government and the people within the provinces. That's the kind of quality that we have to basically drive towards going forward. The directionality is clear. It's moving in the right direction. Money-wise, it's being thrown into regions more and more. Yes, there has been leakage. Money-wise, it has been spent on better quality stuff. Yes, it's not where we want it to be. But if we take a 5-10 year view, I think there's a chance that it will be at the level that we want it to be. Now, the last bit is basically the fuel subsidy. We spent about $32 billion on fuel subsidy last year. A lot. A lot of money was spent on fuel subsidy. The question is not economic. I think the president clearly understands what needs to be done. And we actually tried to fix it last year. When we got together with the coalition partners, yes, we shook hands, let's do it. By the time we got to the parliament, whole different ball game. Everybody voted in the interest of the political party, not the nation. So I think it's key for us to try to get it done again, early part of the game in this year, because 2013 is the year of politics before the bigger year of politics in 2014. Investment has risen, and it's reflective of a better investment climate. Yesterday we announced the latest figures on investment. Indonesia recorded 83 trillion rupees worth of realized investments in the fourth quarter, totaling to about 33 to 34 billion dollars worth of capital formation. 30% of which is local capital formation, 70% FDI. And the good news is only 17% of FDI was related to mining. The rest is actually going to infrastructure, serves things that actually help Indonesia move up the ladder, move up the value chain. The other good news is money is actually being dispersed out of Java. In 2009, only 18% of total capital formation was invested outside Java. In 2010, it went up to 33%. More money going out of Java. In 2011, 41%. 2012, 46%. 46% of total capital formation took place outside Java. It's good. Not only is the money moving out of Java and being spread all across the 33 provinces, but it's actually being invested in stuff that actually allows us to move up the value chain. And thanks to Singapore, by the way, for being the #1 investor, year by year. Give a big hand to Singapore. Those who get it are the Koreans, the Japanese, and increasingly the Americans. The Americans have shut up to being one of the top 5 investors in Indonesia. They get it. They see this burgeoning economy full of 250 million people who consume. McKinsey issued a report saying that today's 55 million people making up the middle class will only grow to about 115 million people by 2030, positioning Indonesia potentially as the 7th largest economy in the world. The 2 key drivers of Indonesia's economy have been domestic consumption and investments. And those 2 are likely to continue in the near foreseeable future. Let me talk a little bit about the future of Indonesia. Last year, Indonesia recorded a GDP of about $1 trillion US. If we were to just hypothetically extrapolate the economy growing at 5% real growth, put on top of that 5% inflation rate, let it grow year on year for 20 years, barring catastrophic scenarios that could disrupt the trajectory, we could end up with a GDP of 6 to 7 trillion US dollars 20 years from today. If we were to accumulate all the GDPs going from $1 trillion last year, ending up with 6 to 7 trillion US dollars 20 years from today, the accumulation of the GDPs of Indonesia over a 20-year period is about 60 trillion US dollars. It's a lot of donuts. 60 trillion US dollars. Now, the key is, are we going to be able to maintain linearity? I see the glass half full because of the youth that's there. Now, if we go by the assumption that 60% of the economy will relate to domestic consumption, there's going to be $36 trillion US dollars that will be consumed in terms of goods and services by Indonesians in the next 20-year period. If we go by the assumption that the government will be spending about 20% of the GDP, the government has been spending about 20% of its GDP, the government will be spending about 12 trillion US dollars in the next 20-year period. If we were to assume that the government will stay on course in terms of spending 20% of its budget on education, which we're mandated to do by way of the Constitution that was amended a few years ago, the government will be spending $2.4 trillion in the next 20 years. That's 20% of the 12 trillion US dollars on education. With that kind of money, we'll be able to fill up this room with Indonesians. Not just the campus in Singapore, but the campuses, whether it's the MITs, Cambridge, Oxfords, Harvards, Stanfords. I got to mention NTU and NUS. And of course, SMU. It's real, ladies and gentlemen. Just by simple extrapolation. Sure, there is a possibility of externalities or catastrophic scenarios that could disrupt the trajectory, but if that were to go in a linear fashion at just 5% real growth, we've got a chance at educating Indonesia better and bigger. The problem is, today Indonesia only has 20,000 PhDs. China has 600,000 PhDs. India has 600,000 PhDs. We don't have not only enough PhDs, we don't have enough masters, bachelors, ITE graduates, and plumbers. So we've got to start somewhere. And the good thing is we've got the fiscal space to do it. So if we can achieve this 2.4 trillion US dollars in the next 20 years, we can spend it right, I think we can have a better future. I think we can be relevant. I think we can start thinking about being side by side with China, with India, with Brazil, with South Korea. At the moment, we can only be proud of having a large scale and being able to sell coal and palm oil. Can't even make iPhones. That's a sad truth. But there's a growing number of Indonesians who see the glass half full. And that's what matters. And I had the honor of meeting up with some Indonesians at this campus. I was told by Arnold that there's about 3% of the population that are Indonesians. Why don't we make that 10%? Last year, the Ministry of Trade sent 111 of its staff overseas to Singapore, Australia, Japan, the US, and Europe. The year before, we only sent 3. We've got the money now. We can actually allocate budget for the purpose of sending people to get better educated. So the possibilities are quite enormous. Now, I can't end my remarks without talking about the politics. I think the politics is very interesting. Politics and economics are related, and they tend to influence each other. We're all aware that this prolonged slump has the ability of affecting adversely the democratic values and institutions. You've seen speeches made by people who want to go forward in Indonesia. One person takes the strongman approach. Another person takes the institutionalization approach. I think what's important and relevant is that we've got to be able to continue this democratization on a path, but mix that with the institutionalization. But we can't have an institutionalization of democracy if we don't have the right people sitting at the different institutions. We can't have that now because we just don't have as many educated people as we should. But going back to the fiscal space reference, I think we've got a chance. The debate about the future will linger from a political standpoint. And I think time will tell. And if one were to size up and assess what would be the main legacies of SBY by 2014 when he steps down, I think the first legacy would be the trajectory of sustained economic development. The second would be the consolidation of ideologies. You would have heard of the announcement by the election committee a couple of weeks ago that would have weeded down the number of political parties that qualify to just 10. I remember 1998 when we just learned about democracy as Suharto stepped down. We had more than 100 parties. The last election we had 34 parties. For next year, we're only going to have 10 parties. And you're seeing a rise of the nationalist agenda holders, which I think has a good probability of securing policy continuity post-SBY, post-2014. And that's good for business. That's good for Singapore. That's good for ASEAN. But first of all, it's good for Indonesia, because that's the track and the path we want to stay on. Politically, I think the view taking for Indonesia, the narrative ought to be with respect to not just the economic story, not just the economic thesis or narrative, but it has to be with respect to the rule of law. The rule of law is important. We get hammered all the time for not being able to deliver legal certainties. Not all the time, but many times. And you guys know it better than I do. You, Singapore being the biggest investor, have not seen it perfect in Indonesia. There have been imperfections, admittedly. And we've got to make sure that this gets fixed. The rule of law, I think, becomes an issue by way of just one or two institutions that need to be taken a view of. That, I think, has some hope in getting fixed because one or two of those are within the realm of the executive branch. So it all depends on who basically moves forward, whether she or he has the vision, the heart, and the guts to basically act upon it. Because if we have the necessary rule of law, there will be level playing field with the Indias of the world, with the Chinas of the world. there will be level playing field for ASEAN with the rest of the world. Otherwise, it's going to be difficult. See, I always see whatever happens to Indonesia happens to Singapore in a lot of ways. Whatever we have to export and import has to go through Singapore. If Indonesia grows, Singapore will inevitably grow. Not necessarily if Singapore grows, Indonesia will grow. But the logic is the former. Next year, I think, is a defining moment. It will be interesting. And I want to quote Jimi Hendrix again. Obviously, you haven't booed. I hope I'm not singing out of tune. But to quote Jimmy, basically Indonesia has been able to afford to buy bread. In the future, we just got to make sure we can put something in between. Thank you very much. All right.
I would like to now invite back on stage Professor Arnold de Meyer to chair the question and answer session. Ladies and gentlemen, please raise your hands and identify yourselves, which organization you're from, should you wish to pose a question to the Minister. Microphones are located on the aisles, and should you be seated somewhere in between, do raise your hands. Our ushers will bring you the cordless microphone. Over to you, President.
Thank you very much. Thank you very much, Minister, for your openness and clarity of what you had to share with us. And being the chair of this session, I'll take the advantage to ask you the first question. You mentioned a few times ASEAN in your speech, and obviously I'm not from here, so I can look a little bit as an outsider. Sometimes you read in the press that Indonesia sometimes is a bit lukewarm towards ASEAN. In a sense, could go it alone, doesn't need ASEAN, is big enough, is member of the G20. You as a Minister of Trade, how do you see the relationships between Indonesia, ASEAN evolving over the coming years?
I think we're completely respectful of the history of ASEAN. When we got together in 1967, the pillars that we embodied or embraced were three. That of culture, economies within ASEAN. And there hasn't been a time when we would meet up with our brothers and sisters from ASEAN, whether it's in the context of trade, finance, tourism, investment, or what have you, that we would be forgetful of the history. I just cannot imagine a day in the future when we would ever be forgetful of the history of ASEAN. And that I think is inseparable from the reality that whatever we do in Jakarta is affected and has an effect on whatever happens on Orchard Road, and vice versa. So that's the reality, and of course with respect to the other ASEAN members.
Any questions from the room? Yeah. As we said, can you introduce yourself and...
Hello.
So I can make more money. the media in Indonesia is predominantly owned by people with political interest. That's the most fundamental problem. I think the regulatory framework has to address that. But I don't think it's possible to address that today, nor this year, nor next year. But hopefully somebody who steps up next year will be able to not only recognize that, but take a view on it. And I think that will help, sanitize, how beliefs and perceptions are shaped. As I said, they're so malleable and they tend to serve the interest of the stronger ones. And the stronger ones, unfortunately, are those with political interest at the moment, not just economic interest. The second, or the first part of the question, we can talk about, deficiencies in law enforcement. But I think what has been apparent to a lot of people from within and without is the tangoing between the legislative branch of the government with the apparatus, right? They tend to dance together. That makes rule of law a little bit difficult, or more difficult than it should be. I think if one dares to take a view on the rule of law by way of this apparatus that's within the executive branch, that will, I think, quite significantly dilute the value proposition of the legislative branch. And be hopeful that the next political process will weed out whatever needs to be weeded out, or whoever needs to be weeded out, in hopes that people see, hey, it actually is not too bad for an ex-banker to join the government. And I think, look, I mean, I've been able to recruit special staff from the private sector, and they make no more than $500 a month. I make $1,900 a month, plus a sack of rice. But the thing is, I have attained enough financial independence to the point where, if I get hit by a bus tonight, my family will be okay financially, not spiritually. But the staff that I've recruited, I think, have taken that view. And I think it's going to spread out. The BKPM that I nurtured for 3 years until about 6 months ago, you go there and you try to get a PMA license, it won't take you any more than 2 days. Some have only taken 5 hours. If you come to my ministry, you try to get an export and import license, it will not take you any more than 2 days. Before that, it took a lot longer. So I think this will happen, but the problem is the audience likes to get it done yesterday. And I tell people, what I pitch is directionality. I don't pitch absolutes. It won't happen tomorrow. But if you take a 5, 10, 15-year view, I think we will be less corrupt. I think we will be better educated. We will be better. I tend to think that way. Unless some externality beyond the control of everybody just rips it apart, or there's some centrifugal force that rips the country apart. That's beyond me.
Any other question? I see 2 questions at my extreme left.
Right. Currently, I'm a student at NUN. Well,
You can leave the micro there. in that corner. Yeah.
I think, by December 2015, realistically, all ASEAN countries or economies will not be able to tick off all the boxes that should have been ticked off. I think we would be happy if we can achieve 90 to 95% of what we aspired years ago in terms of creating a community. Now, is that going to be competitive with respect to the world? Probably not very competitive like we would have been some years ago, because now everybody wants to be a lot more competitive than they ever were before. Take a look at the US. The US is going through a shale gas phenomenon, which will deliver gas at $2 to $3 per unit, MMBTU. And that will I think will make the US more competitive. And not to mention they've got the innovative capability like many countries don't have. So realistically, by the end of 2015, we will be competitive, but I don't think we will be as competitive as we thought we might be. And with some says, sorry, we cannot complete it in 30 days. We can only do it in 90 days because we have to go to Parliament and it's subject to approval. We wait. So that, I think, will reduce.
Good afternoon, everyone. I'm Daniel from School of Information System right now, year 4.
Yeah, I mean, that comes from a government official. The first part of the question, look, with the investment board, when I joined in November 2009, things took a long time to get done. And we fixed things. It took months. And I implemented a policy where if we were to recruit anybody, he or she had to have a GPA of 3.5. And he or she had to have a TOEFL score of 600. You know what happened? I got summoned by the Parliament. I was grilled for 13 hours over something that I truly believed in. This time it was 2 hours. But now, you go, you try it. The Ministry of Trade. See if you can, get an export or import license efficiently. I think you'll have a good chance of getting it efficiently. People communicate. And my point to the Parliament is investments and trade. How can we do that if we can't even speak English? It's just mind-boggling. And yesterday, I found out from my Secretary General that there's already 220 staff of the Ministry of Trade who've scored 600. By the end of this year, I think at the rate we're going, we should be able to have 1,000 employees. That will probably be about Yes, brown bags do take place, but you just have to believe in what you think is good for the company or the government. Why, people ask me, why was I able to recruit people with GPAs of 3.5? I went around campuses in the country to University of Indonesia, ITB, UNPAD, UGM, all the various universities. What I sold them was the vision, and I sold them the concept. $1,000 a month, 10 years from today, assuming the number of taxpayers go up from 10 million to 25 million people. And guess what? Every year, BKPM would usually receive about 300 applications. As soon as I elevated the requirements, GPA of 3.5, TOEFL of 600, 2,500 people applied. It's funny. The higher you set the requirements, the more people apply, even though $200 only. But they get it. The smart ones get it.
Yeah.
Okay.
Who else? Yeah, I have a question over there. Can we
just take one more or two more questions? Yeah.
There is a.
Gita, thank you very much. Nice to meet you again. During the WIF in KL many years ago.
Look, we can call it we're losing to Iskandar, just to be very blunt, but we're not thinking 1 or 2 years here. I think, again, I am a believer of the thesis that I think Indonesia has a real chance of being relevant. The problem is we just don't pay well enough, right? The government officials, people who are supposed to enforce law, people who are supposed to enact policies. We don't. The remuneration has taken place with, I think, 6 ministries. I get paid $1,900 a month only, but some of my colleagues are now getting $10,000 a month ever since, 20 days ago, the 1st of January. That will happen. They'll roll it out. And this will get rolled out to all 33 provinces. So Batam, I think, will be as concerning as you might have illustrated it. But I think there will be a time when we will be able to enforce law, enact policies better. And I think that answer relates to the first part of your question, in that how do we actually rejig all this? It does require fiscal view-taking. And the fiscal view-taking is a lot more doable and possible now because the space has grown. We're certainly better and more capable of spending. We run a debt-to-GDP ratio of 23%. And on a continuing declination, it will probably be less than 20% in 3 years' time. And I think we can spend more money. And the government is taking the right steps, I think, but it will just take time. So yes, enforcement has been an issue, and putting different parts of the puzzle together has been an issue. Just be patient. I know that's not a good answer, but...
I'll take the last question for myself, and that is, that's the privilege of being the chair, right? A passionate plea for education, and obviously as a president of a university, I'm very much interested in it. But what you painted to us was a picture of we have the financial resources to invest in education, but we don't have the people to do it, basically. And you gave a few examples of how, from your perspective,
Well, we would like to send as many people as possible to Singapore. Surely a good number to SMU. And we can afford it. It's nice to be able to say that. You need to have the scholastic aptitude to be able to enter schools like SMU, and that's I think the worrying part. But we will address that, and I think by the time we send applications to SMU this year, I'd like to think we have some qualifying people, and we will be able to be in a position to support them, and to the extent you can facilitate the bridge. From a technical standpoint or what, that would be greatly appreciated.
But you see also the development of universities inside Indonesia, further development, new universities?
Yes, but I think the private universities have been more proactive as opposed to the government universities. And the private universities are talking more with the outside, which I think is good in the context of globalization and all that. But at some point, hopefully they can gel together with... I see a future nearby where we can have an affiliation, with SMU by one of the universities in Indonesia. I can see an affiliation with a Harvard University by one of the universities in Indonesia. And that is... from a regulatory standpoint, doable.
Thank you for your... But that increases even my admiration for that. But I'm really impressed by that passion that you have for public office. And secondly, I also think that you painted a very interesting picture of a half full glass of what is in Indonesia. I think, I'm convinced that what we've heard is a great picture of the potential, with some of the caveats that you added to it, some of the conditions that need to be fulfilled to be successful. But I would like to thank you very much for your openness and your willingness to share this with us and also to answer the questions of the audience. Thank you very much.
Thank you.
I'd like to now invite President to present a token of appreciation to Minister for spending time here with us this evening. Gentlemen, we've come to the end of today's lecture. On behalf of SMU, thank you for spending time here with us, and do join us for some light refreshments outside this auditorium. Thank you and have a good evening.